Welcome everybody to the Chinchilla Pickin' Podcast. It is November the 19th, 2023 at 1:12 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the only Baron of Bonds, Brandon Beaver. Brandon, how are you?
I'm all right. How about you?
I'm sick. I'm sick, which is why I like that we do this via the conference meet here via Zoom. But I am sick, so I'm gonna work my way through this. I'm gonna have to mute my mic to blow my nose and stuff, but we'll get through it, and we'll get to the other side.
Disgusting.
Yes, right. I should have said trigger warning first. Um, so there was a lot of interesting news last week, and there's one big news coming up this week that I'm interested to see how it does. We'll get into that later on. But it's Nvidia, and I want to see how Nvidia does this week because Nvidia jumped so high in stock price because they were doing such a huge jump in revenue, but they jumped at that expecting to continue that jump in revenue going forward. So I want to see, did they continue it quarter over quarter? If they did, great time to get in. If they didn't, then that's a question of, is it overvalued?
Yeah, great company, expectations super high. Earnings have been super high. They've been hitting the expectations, but the price has been continuing to uh skyrocket as a result of those expectations. So it seems to me like at this point in time, it should all be priced in. We'll see if you're right about that. I would expect lower, but you know what? I've expected lower before from this company, and I've been wrong. So
You and me both. You and me both. But like you said, great company. Going to continue to make money hand over fist. But today's show, rules. Brendan and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You actually hear the live discussion, the bicker, the banter, the back and forth here on the show. Today, when we discuss what we're going to talk about, we both had the same topic for our main points. So I'm going to let Brandon lead it off, but we both have a lot of information regarding this. But Brandon, take it away.
the main the main factor here with earnings this week, especially when you're looking at Walmart and Target and maybe to a lesser extent Home Depot even, it was expectations. So expectations for Walmart, I mean, they had a great quarter, but expectations were super high, so the stock went lower. Target quarter was very much mixed. The price went up on it because the bar was set super low.
I already disagree. I don't believe the bar was set super high for Walmart and they disappoint. No. For the Q3, they hit. They actually beat expectations of everybody there. So they actually made expectations. So I think that's an incorrect statement.
But no, it's not, because what it was, why the reason that's given for the stock to go lower was softer guidance.
Guidance, yes, but they didn't miss on what was expected. The bar was set. They hit the bar where they jumped over the bar.
But that was all priced in already to the stock, which is why it dropped. Right? Is that
fair enough? All right, let's continue because I want to get into these numbers and stuff, and talk more about this and dig in deep.
okay? So they posted a third quarter net income of $453 million. This was 17 cents per share on an adjusted basis. So if you're looking at the stock here, different brokerage, they may report it as $1.53 a share. They may report it as 17 cents per share. That depends on whether or not they're looking at adjusted earnings or unadjusted earnings. So adjusted earnings of $1.53 a share, and that was slightly ahead of estimates for $1.52 a share, according to FactSet. This adjusted figure, this excludes the effects of $1.36 per share from net losses on equity and other income investments. Those are one-off things, so that's why they kind of take that off of the earnings. Those are one-off expenditures, not going to happen again in the next year. So that's why they say let's take that $1.36 out of this, and say 17 cents a share or they keep the $1.36 in and say $1.53. So it just depends on who you're looking at. But with this company here with Walmart, e-commerce was a strength. It grew 15% globally, and there was a 24% jump in the United States alone. And that was mostly pushed by pickup and delivery services. Walmart did cautiously raise net sales and EPS guidance amid slower consumer discretionary spending and
Well,
shares.
hold up. I'm gonna interrupt you here. I'm gonna interrupt you because you're going into now the guidance. Let's talk more about the numbers that just happened, right?
Okay.
All right, because this is gonna build my foundation of my point I'm gonna make. So the numbers they reported year over year was an actual increase in revenue in top line and bottom line, the increase everywhere, right?
Yes.
The only thing I really found interesting when going through and reading the whole earnings report, I went to the Walmart investor site and actually read the whole thing and spent time on this one, and was that they actually took a loss of 1.7 billion because of currency fluctuations from around the world and transferring everything back to dollars. That was a crazy thing to read in there. But year over year, they did grow, which is in contrast to a majority of other retailers out there right now in the current market, such as their biggest rival.
Target.
So I want to say that before we go on to their guidance here going forward, because there's also contrast in guidance. But
Yeah.
go ahead.
So revenue surged 5.2%. I don't know if that's surged. It's almost surged 5.2%. Increased 5.2% is probably the best way to say that. It's $160.8 billion. And they said that they expanded their revenue streams into sales of data and to ads. Their comparable stores sales grew 4.9% year over year. And Sam's Club stores rose 3.8%. And they said that was pushed by food and healthcare product sales. As I said, they were cautious in their guidance. They raised its net sales guidance for the company for fiscal 2024, but that did fall short of what analysts were expecting. Excuse me. Jeez, I can't talk. Adjusted earnings per share estimated between $6.40 a share and $6.48 a share, and that was slightly below the $6.50 that analysts had expected them to guide towards. And they said net sales were increased between 5% and 5.5%. That was enough to send the stock lower. I think that was the biggest drop in the stock since 1987. Go ahead, Dave.
All right. So don't ask me to do research on a stock and not have a lot of counterpoints here. So first of all, the Walmart now expects fiscal 2024 earnings per share to be $6.40, $6.48, right?
Yeah.
That's what you just said. But that's up from its prior forecast of earlier this year of $6.36 to $6.46. So it's actually raising their forecast of net earnings.
So they
right?
raised their forecast. Okay, gotcha. So they did raise their forecast. I missed that part. They raised their forecast, but they still missed the $6.50 a share that analysts had expected.
Right. And what they went in to say, if you read the actual thing, they're going in this here to say, they're saying that we are seeing a consumer trends that they are being more, I guess the lack of a good word here, picky about what they purchase and buy, and that they're consistently getting more people of higher income in to buy groceries at Walmart, trying to save $1 or $2 on their grocery bill. And so because they're seeing, and we've talked about this all year long, because Walmart is seeing these things, they're expecting the consumers not to spend as much this holiday season.
Right.
Now, I've heard the same statement being said by certain analysts out there, one analyst from Goldman Sachs said this about the retail industry this fourth quarter, was that it's not going to hit the numbers everybody's expecting to come in lower. So Walmart, I believe, is actually being more accurate and not just trying to give a rosy review because they've had like other companies who have had a horrible PR year and have horrible sales this year and are trying to push up their stock and say, come here. Walmart's actually saying, look, man, we're doing well. We're raising our forecast yet again. We continue to beat year over year, same store sales. We're just saying that fourth quarter is going to be a little slower.
Yeah. The CFO actually said we see our customers showing ongoing discretion and making trade-offs to be able to afford the things that they want, given the sustained high cost of the things that they need. So that kind of goes into your point there. Walmart is also famously conservative in guidance, which is why those beats come across the tickers so easily to them every quarter.
Right. But that's what another analyst called out and said, look, I think you guys are just doing this so that you could go ahead and beat it next time you report earnings again.
Right.
And I think this is just a game you're playing with the stock, because you're going to consistently do it. Everybody, the major banks went out there and they said, oh, we'll lower our target price of Walmart. They all lowered it by like $5-10 a share. Nobody really did any huge amount of lowering on the stock. So they still expected to go higher than where it's at now. I think the lowest one I saw was Goldman Sachs at 185. So that's their price target here. So it's still and like you said, they say the this gives us reason to think that slightly more cautiously about the consumer versus 90 days ago. So again, they're concerned, they're worried about what's happening, which is contrary to the overall market, who believes, hey, we beat inflation. The Fed's going to start cut in rates, and it's we're going to have a period of deflation, and the consumer's going to be strong for a bit. That's what some people are thinking, and that's what some people are putting out there when on CNBC and Bloomberg and all these other channels that's also incorrect. I mean, I don't see a recession, but I see a consumer majority of consumers who are going to be hurt and not have as much to spend. I've already seen it just here at the I take part in a local Toys for Tots, and I went in and dropped off my toys that I drop off there, and I was so far the only one who's dropped off toys, and that box is usually at least full by now. So I see it in lots of different places where people are cutting back on what they're able to do.
And nothing ever moves really in the market or in the economy. Nothing ever moves in a straight line. There's fluctuations. So I wouldn't be surprised to see inflation tick back up a little bit before it continues to go back down. So just don't expect it to continuously in a straight line to see inflation continuously drop in a straight. I don't think that'll happen. It could happen. It's possible.
Well, I mean, they're talking about, all right, so here, let's get into it because you brought this up. Inflation, right? So I have the U.S. Bureau of Labor Statistics page pulled up here right now as we're talking, in the Consumer Price Index. This is what everybody was talking about, saying that, hey, CPI, it's great, hey, the Fed is going to stop. The CPI number for October, which is what everybody was talking about this week, was unchanged from September. It didn't go down, Brandon. It didn't go down.
Yeah.
It's just unchanged is all it is. In a period where the cost of oil also went down. So I think that to me, when I look at the numbers, I don't see rosy yet. I got to see decrease in CPI month over month to get all rosy and happy here. When I see just unchanged, it means that we're still not getting enough to have the Fed hit that mark. Yeah. Jerome Powell's come on TV multiple times, said 2% is my goal. We are not going down. We're stuck right where we're at.
Yeah, and I feel like the market right now is kind of pricing in the Goldilocks effect and that kind of period for economics that nothing could go wrong for stocks, and I think that's an error too.
That's a huge error, especially when you have some retailers like Walmart saying we're going to see a lower fourth quarter. Yeah. And that's in contrast to other ones like Target, who are saying that we're going to see a 20% increase in the fourth quarter. That tells me Target's going to be buying excess inventory that they're not going to be able to sell, versus Walmart, who's going to repair effectively. They're only going to buy what they believe they can sell.
Right. So Target selling a heavier mix of clothing, and they have home goods and impulse purchases higher in their sales percentages than Walmart, and Target has been particularly squeezed lately because of this. They were hit higher with higher levels of organized retail crime. They had to shutter 9 stores in major cities. They blamed those 9 stores closures on theft and threats of violence. And the result of that is that Target stock has gone down too, fallen nearly 26% prior to earnings. Um, and the value of it was cut by more than half since the highs of the COVID pandemic. Target on Wednesday, they did top Wall Street's quarterly sales expectations. They beat earnings. And then purchases in high frequency categories like food and beauty help kind of prop up the weaker customer spending. For the second straight quarter, Target's comparable store sales declined, though. And when we say comparable store sales, what we're doing is we're saying same store sales, but take out the impact of store openings and closures and renovations. So that does not include the 9 store closures that they had.
which would have
But
been worse.
despite that second straight quarter, the comparable sales declining, the stock went 18% higher after
Because they gave good guidance, but they're not going to be able to fulfill that guidance. If you were to put a gun in my head and tell me to go ahead and do options right now on these two companies, I would put a put option on Target and I would put a call option on Walmart.
I would agree. Walmart's forward and we kind of touched on this. I think it was last week or it was the week before when we were talking about how we both liked Walmart, but I said I didn't think I would buy it because of forward earnings of 24% didn't make any sense. The valuation of Walmart didn't make any sense at the time. It was a 7% decline. I still don't see any margin of safety there. I think it's kind of fairly valued now. So I'm still not really buying Walmart, unless there's a significant dip in the price there, even lower than what it already had. But yeah, I think that Walmart's still on a better footing than Target. We're not paying attention to the fact that last year Target had to discount a significant portion of its inventory in order to sell off overstock and to clear out back rooms. And so everybody's kind of looking at Target right now and looking at what really led to the increase of the share price of Target was the higher percentage of profitability. Gross margin went up. But gross margin went up this year because they're not having to discount as many items as they did last year when they were so overstocked and their back rooms were just full of apparel. So, yeah, I think a lot of people kind of looked at Target and said, hey, if gross margin could increase like this and we can have a decent gross margin year over year number on Target when sales are getting hit, then what do we think that they're going to be able to do when the market turns and things go back into the favor of Target? But, as I said just now, I think that's I think you're misleading yourself to think that way. Because the gross margin increase year over year was helped because they were having to mark down so much last year.
And so Walmart did not have to mark down as much, and they still had a net margin increase of 32 basis points.
Yeah.
So
the CFO for Target said we're laser focused on moving both traffic and sales back into positive territory. But they caution that's not going to happen this year, even with a holiday. So we're not going to see that happen in the fourth quarter. But earnings per share, they did blow past expectations. $2.10 is what they clocked in at versus $1.48 expected. Revenue was $25.4 billion versus $25.24 billion expected. So the bar was pretty low here for Target to be able to beat. Even with comparable store sales dropping. Target's significant earnings gain in the third quarter also reflected its weakness in the year-ago period, like I just said, when it had canceled orders, sold merchandise at deep discounts, and they were trying to clear through that gut of unwanted inventory. Now that's happened, though, that's not that's not to say that the stock can't go higher at least a little bit. Because back rooms being cleared out, warehouses having less touches per product and stuff like that, that does lead to a more efficient retail sales operation.
all right, so yes, it does. I don't see Target meeting their guidance. I've had too many retailers and too many people are saying there's going to be a lower fourth quarter holiday. We are disappointed last year with the holiday sales. We're going to be disappointed this year if we're expecting great sales this holiday. We're not going to see it, man. We're not. I'm calling it right now, today. We are not going to see a great holiday sales, right?
No, it's not going to
Um,
happen. I don't think it
we'll
will.
still see. We'll still see people out shopping. You're still going to see the traffic. You're still going to see their like parking lots full, but people are going to be leaving instead of $200 worth of stuff. They're going to be leaving with $50 or $80 worth of stuff. The ticket. That's what companies look at is how much each customer is buying is going to drop.
Yeah.
You're still going to see the crowds, but they're just going to be spending less.
Yeah, so the bright spot for Target having their employees be, able to be out on the sales floor and actually help customers rather than have 75% of them in the back room trying to organize a messy stock room. And then, being able to get product out onto the floor when it comes out onto the truck rather than having to have it, sit back there for days while they sort through all the crap that they have. That's the bright spot here for Target, but I still don't see really a good reason to buy Target. I don't see it in a valuation of the company. I don't see it in holiday earnings. I don't even see it for like the next 12 months. So
So yeah, when you compare Walmart and Target, these are just completely opposites here of companies. Target's had some trouble this year for political reasons, PR reasons. They've had some issues. They saw some lower sales because of that. They saw some lower sales because of the theft, closing stores. Walmart's closed some stores too, though. So we're not gonna be around that. But I think Walmart's handled everything from the pandemic to supply chain to inventory better
yeah, the political
the
stuff,
whole time.
I tend to ignore the political stuff unless it really does have a huge impact on the stock and bring it down to where it's a buyable level. Because that tends to go away over time. But I don't think that the issues with discretionary spending are going away anytime in the next year, at least.
Yeah, I mean, companies have to get more prudent with their money. You can't just be throwing it out there. They're unsure about whether or not we're going to see any more spending bills coming this way right now, especially with a divided Congress. And then we unsure about the election next year. So if you're expecting more Inflation Act type spending bills are going to pump money into the system, you're unsure, so you can't count on it. So then now you have to look to your own books and you have to be fundamental and cut costs. And how do we write our own ship? And if we get that other stuff, that's great, but that needs to be a bonus and not what we count on.
Agreed. Agreed.
And Walmart's doing that. And Walmart's being honest about how things look. I don't think Target's being honest. I
Well, let's
don't.
go back to this real quick. Let me go back to the point that I was trying to make.
Go ahead.
So, would you agree with me that Walmart dropping 7% versus Target going up 18% was a symptom of investor expectations being super low for Target, making it a little bit easier for them to beat individual investors' expectations, where Walmart kind of had everything priced in already?
Yeah,
And
sure. I'll give you that. Yeah.
okay, because that's my theme. That's my theme here when you're looking at earnings. When you have a company that's already, even if they're doing really good, you could look at Walmart's earnings and say, why did it drop 7%? They beat on the analyst expectations. They beat on their own expectations and such. Like, why am I not making any more money? And it's because that was already priced into the stock.
Yeah. Yeah. I mean, they even grew profit margins. So I mean, well, it's all been priced in. I kind of like Goldman Sachs expectation of 180, 185. I just don't have a timeline for getting there. And that's the thing. Like, are you wanting to put money in and just let it sit for what would that be? What a 20% gain? I mean, it could be 2 years before you get that gain.
Right.
So that's a choice to make. I have cash, but I don't have any cash on hand that I'm willing to invest right now. I'm fully invested in where I'm at. So, you know,
So
I'm
am
not going
I.
to jump in. I'm not going to be jumping in Walmart. That cash on hand is for when I find a for sure undervalued
Yeah.
company. Walmart's on the edge, like maybe, maybe not. That's not a for sure thing for me, so I'm not putting it in.
And that's why I would say it's fairly valued, but it is on my watch list of companies to buy if I look at it and say that I think I can make 20% or more in the next year.
Right there, you go. There you go. Cool. I think all retailers are going to have a bad fourth quarter. I think you're gonna see this in the Friday after Thanksgiving 4-hour trading window that you hate every year. Brandon, if you're listening right now, Brandon texts me every Friday after Thanksgiving. Why do we have this trading day? And
It's
he
so
just hates it.
stupid.
You just hate it.
It's so
But
dumb.
it's a tradition, man. Don't mess with tradition.
Either go
Um,
all in and do the regular traded day or just give us a day off.
so the shortened day, what I think people are already either bought into certain retailers or sold out of retailers going to be doing this week. That's what they're going to be positioning the retail trades this week. And I think you're going to see a sell around. You're going to see a downturn in retailers because they're not going to hit the numbers. And that's what I'm calling. That's what I'm expecting. If somebody beats, great. But I don't have any money in it, so I'm not concerned.
I'm old enough to remember though when those 4 hours of trading were kind of okay. Like it was like, all right, let's drive around the parking lots of everybody, of every retailer, see how many people are in the parking lots for Black Friday, and let's make some judgment calls for trading based on that. But nobody cares about Black Friday anymore.
Yeah, I mean the Black Friday deals have already started. They've
Yeah.
already gone in. Cyber Monday's a bigger deal day than anything else. So I mean, there's lots of other deals out there. Black Friday is great, but I mean, I think those deals have already started because retailers see a weakened consumer and they got to give them more time. People are going into debt, basically using credit in order to buy groceries, and so it's not a strong consumer right now.
Yeah.
They're going to be very careful where they spend their money. So that's what I'm looking at. But my biggest thing this week is Nvidia. Here's why. Well known on this program, I've owned Intel for a year and a half, and I want to get out of my Intel position. It is not making me money. Uh, and if Nvidia has a great earnings, not only will it justify the stock price, it will actually cause Intel to go up as well. And so I'm hoping for good earnings this week by Nvidia because then it will justify its stock price. But I'll also be able to exit my Intel position with a small profit, which is what I want to do because it has not been a winner for me. And I could put that money to use in other companies that are winners for me right now.
There's a lot of expectations that semiconductors are kind of turning the corner and that maybe they bottomed and that we're going to go back and do a new bull market for semiconductors. So maybe Intel will increase and you'll be able to get out.
Yeah, I mean, yeah. And when I bought in, I said it was a long term. I was thinking years out because I was believing in all the plants that were being bought and paid for or helped to be paid for by the US government here in the United States. And I believed in the future because Intel was building a lot of these plants. They have one big one in Ohio that's going to be opened up here soon. So they have a lot of plants, chips being built here in the United States, which is going to make them a lot quicker to get to market. So we don't have a chip problem. Versus Nvidia doesn't have a lot of manufacturing sites in the United States in comparison. Which is still so if US and China still have these issues, then that could be a problem for Nvidia future. It's been a problem, and they've mentioned it before in earnings. They still have managed to work their way through it, but it's still a concern, especially since I don't want to get political, but the geopolitical headlines, some of them I read this week and this was a quote from a headline, and I just wish I could remember it because I like quoting where I get it from and who the author was. But it was China says that they are not worried if they have to go ahead and take out Taiwan, they can easily do it. Was a quote from a certain author on Reuters this past week, and that's concerning to me because all the semiconductors and chip plants in Taiwan would suffer with that effect, and that would make stocks drop across the board everywhere if that happened. So that's very concerning. That still has to be a concern in the videos. But with the U.S. plants being built for Intel and other semiconductors, that's not going to be as much as concern for them going forward, and that's a good thing for them.
Yeah, I agree. And yeah, so that's where
Right.
you're with Intel. 100%. I think shifting operations and at least diversifying them more across different countries across the world would be a much better idea um, for Taiwan Semiconductors in particular.
Yeah, and yeah, people don't understand how big Taiwan Semiconductors is and what they do, but I mean, monster company, and it's I'm pulling up the price of Intel right now. It looks like I am actually up. I was up 1% right now, so I'm actually in a good position. Uh, I might actually sell before Nvidia, but that's a horrible return of 1% in a year and a half. So horrible return. At least it's a positive. I might wait and see how Nvidia does. So
Yeah, well, you're in the stock market where you wait long enough, your flowers can outgrow your weeds. So
yeah, that's true. That is true. That is true.
now let's rewind just a little bit back to Taiwan Semiconductors, though, because I mean they don't trade anywhere near the multiple that some of their biggest customers trade at. They don't trade anywhere near Nvidia or even Apple for that matter. And part of that is, and most of it actually is because China's constantly weighing on their valuations. Um, the biggest semiconductor company in the world, 67% of our semiconductors come from Taiwan Semiconductors, but they don't trade like that. Um, I am glad that they're moving a significant portion out of their business out of Taiwan. If they could continue to do that and keep costs low, cost of doing that is pretty high. It's not an easy thing to do, but when you take into consideration where their stock's trading at compared to where their earnings are right now, the amount of value that could unlock for them if they could get away from Xi Jinping's iron fist, I think that will benefit them greatly over the future.
I agree. And talking about that leads us into one of my two headlines today. Dun, dun, dun. Headlines, headlines, headlines. I just made that up. All right. Here's one of my headlines today for you, Brandon. You ready?
Mhm.
This one comes from the Reuters Newswire yesterday, Saturday morning, 5:52 a.m. Headline reads: India grants incentives for Dell, HP, Foxconn to make IT hardware locally. So the Indian government has approved investments by 27 companies, including Dell, HP, and Foxconn, under its $2 billion incentive scheme to manufacture IT hardware domestically. Basically, they're expected to invest currently 360 million while creating 50,000 jobs in the sector. They've already got approvals granted for domestic manufacturers, including Dixon Technologies and VVDN. Basically, the government had in May doubled the value of an incentive scheme to spur domestic production. And the country is offering cashbacks to manufacturers on sales of locally made goods that exceed an annual target. They want to go ahead and bring the supply chain all into India, the same thing that US was doing. And I think this is just another response to what happened during the COVID pandemic. Brandon, does this make you feel better about some of these manufacturers moving out of China, Taiwan taking more of it on,
Yeah.
United States taking more of it on, India taking more of it on? What thoughts on how
It,
this might affect some investments?
it does for right now. And there's your green light. You can't just completely uplift your entire operations out of a country and move them to one, but you can start slowly doing it. I think Taiwan Semiconductors should do it. I think Foxconn should do it. Start now and do it slowly so that you don't have to, like I said, completely uplift your operations. But the political uncertainties involving India are much lower than they are involving China. So,
Right. And I think this because India has taken steps to make it more competitive in the world market, especially with their engineering programs and the incentives for engineering programs over there. They have quite a lot of them. I think this makes this moves India again. It almost they weren't a third world country, but they weren't exactly considered the upper class of the first world countries. And it was just due to their infrastructure. And if they can use this as an opportunity to improve their infrastructure, then that would be better. I don't know if you've ever been to India and actually seen one of their like the United States, we have transformers up on poles and wires run out of it. If you actually Google some pictures of how it works in some of those cities, people just go up there randomly and hook up wires to these transformers and wire their own electricity all over India. It's a big mess. Their infrastructure needs to be redone. Hopefully, they can work on that and get that in a better situation.
The
So
politically correct term for it is developed country now, Dave. Thanks. You just got us canceled.
I'm sorry, developed country.
So, anyways,
Developed country.
yeah, and there's going to be a host of new problems too. You know, they're on the border with Pakistan, who they're, you know, every once in a while there's a flare up there, and Pakistan's a nuclear power, but it's still not anywhere near the level of insanity that we're having to deal with China.
Yeah, and this is a little known fact. Is not everyone knows this, but the Pakistani and Indian armies and the Indian armies and the Chinese armies on their borders have had fist fights so that the countries don't go to war because they just don't like each other that much. But they've had group fist fights with each other. So I just hope that it doesn't ever turn into anything else. But there you go.
Yeah.
Next headline. Let me know what you think about this and whether or not it's true. It has to do with the CPI. So U.S. equity indexes rise this week as cooling inflation boosts bets Federal Reserve will cut rates by mid-2024. This was the MT Newswires, and this was done on, looks like Friday at 4:57 p.m. So the end of day Friday, they went in there, right? It talks about how we ended up the week. The U.S. 10-year fell to 4.44% on Friday from 4.65% on Monday. So 21 basis point drop throughout the week. Speculations of dovish Fed pivot has grown louder following a bunch of downbeat. I don't know who. All right. So where are they getting this that has grown louder? Because that's not what Powell says. Go ahead.
Here's where this gives me a headache, and a big one, by the way. The Federal Reserve doesn't look at everything and say, oh, it's going great right now. Let's cut interest rates because it's going great. If they did, they'd be idiots. They don't do that, right? So if you're expecting a cut in interest rates, why? Why would you expect that? You would expect a cut in interest rates because of a recession, which is also not good news.
Yes. I think everybody is getting too excited and they want to see a turnaround and back to easy money quickly. And that's not what Jerome Powell has said. He has publicly said he wants 2% rate. He's determined to get there. The best outlook you're going to have for the next few Fed meetings is just doing nothing. Right. That's your best outlook.
Exactly.
You're not going to see them cut. They're not going to cut. They're going to raise, if anything.
So yeah, and stocks do usually go up when the Federal Reserve cuts rates, but that's because they've dropped hardcore because news of a recession has hit prior to that. And then the Federal Reserve comes in and cuts rates, and they view that as a solution. So the market goes back up higher and it revalues tech companies higher and such, you know. So that's why the market's moving higher on rate cuts usually. That's why it usually does. It's not just because the Federal Reserve looks at it and says, hey, I just feel like I want to cut rates today. You know, everything's going great. So let's provide a boost.
Is it going great? Because Amazon's cutting jobs right in front of the holiday season. And what does that tell you? What does that tell you?
So no, it's not. It's not going great. People are having a lot of trouble, you know, just affording their regular everyday grocery items. Dave, I can carry in $150 worth of groceries in one trip now. I know I've said this before, but there might be new listeners, so they might laugh at the joke. I haven't gotten any stronger, Dave. It's
crazy that people got excited about that core inflation staying the same and not going up. And that's what people got. I don't think that's what people got excited. I think what happened was you saw investment banks seen an opportunity to buy undervalued companies, and they did that. They brought it in. The market had its 10% correction, which happens a few times a year, no matter if it's in a bull market or not. I remember 2004, 2005, you couldn't lose. You still had a correction every now and then. I mean, come on, guys. So they just took advantage of this latest one, and that's what happened. There's no like rhyme or reason to it. You have 20 different people with 20 different versions of why the market went up this past week. And maybe I'm wrong, and maybe it's one of those 20. But I mean, I honestly do not. You will never convince me that it's because of the Fed. And if it is, if that's why Americans are buying because of the Fed
Then short
this
the
week,
market.
yeah, come on. That's ridiculous.
3.7% inflation. Let's cut rates now. Come on.
I mean, yeah, people haven't even started paying back their student loans. That still has to take.
Yeah.
I mean, that started, but they haven't made their payments yet. And if they're already using credit cards in order just to get groceries, so basically taking lines of credit out to buy groceries, they're not going to be able to make these student loan payments. They're going to go in default. So they're going to be applying for, all kinds of forbearance and stretch it out, and let me apply for this hardship here, and that's what's going to happen. So the government is not going to get their money back that they lended out, and we are still in quantitative tightening, not easing, tightening. Yes, they lowered it tremendously from where it was, which I disagree with. They need to get out of it, but I mean, we're still tightening. So I mean, I don't see this rosy outlook right now. Again, I'm in the soft landing camp, but I don't think it's going to soft land next month. Okay, yeah. So it's.
And by the way, I think behind the scenes, the tightening has more of an effect on the market than the actual interest rate hike does.
Yeah, exactly.
Because of the sheer volume of things that was on the Federal Reserve's balance sheet and still is.
Yep, 100% agree. So there you go, man. That's Brandon and I, 2 thoughts. Brandon, final thought for the show.
Retail earnings weren't as bad as I expected, but they weren't that great either. Holiday quarter, still low expectations from both me and you, Dave, on this. I think the holiday quarter continues to get less and less relevant to retail throughout the years. E-commerce, that's a big boost. Cyber Monday is huge. But at the same time, it also costs more to do e-commerce because of the shipping and handling on it. So I don't know. I'm in wait and see mode for the fourth quarter of this year for sure.
I definitely don't see. I see the holiday sales being lower than what expectations are set at currently. I liked Walmart coming out and saying that's what's going to happen. It's going to be lower than what expectations currently at. I disagree with Target saying we're going to exceed. My only concern with the rise of theft in this right now in America, you're going to see a lot more porch pirates, which means people are going to be filing claims of Amazon saying I never got my package. And so then now you're going to have to see Amazon pay out some of those claims, and that could be a hit to some of their numbers going forward. So I these are some of the concerns I have currently with the holiday market, plus like what I just mentioned, student loans, holiday sales. People are going to be out there in crowds. The crowds are still going to be there, so don't get fooled by that. It's just they're no longer leaving with $1,000 worth of stuff. They're leaving with $500 worth of stuff. So they've cut back what they spend after inflation has gone up too. So that's all over a bad thing. So if the cost of everything's gone up 10%, but yet you've cut your spending in half, that's awful for the companies right there. They can still say, hey, our top line revenue was great. Yeah, but inflation's gone up, and that's why. It has nothing to do with your actual sales.
What's your net profit?
You actually sold 900,000 Lego units instead of 1 million Lego units. So you actually sold less stuff. You just charged more for it is all that happened. So, and that's what I'm looking at. So and then, Halo, red versus blue, Walmart, Target, blue team's going to win this holiday season. And I think that's because they're better prepared. Target's going to be left with a lot more inventory glut and that they're going to have to mark down the sale to get rid of. Okay. What I'm looking at, again, NVIDIA is the hot topic of the week. That's going to continue to be a hot topic of the week for everybody. That comes out Wednesday. So look for Friday to be really moving on semiconductors based off what NVIDIA reports on Wednesday. You get a day to digest it, which is kind of good, I think, that we're going to spend the Thanksgiving digesting the video numbers because they're about as stuffed as the turkey's going to be come Thanksgiving. And we're going to need that to properly trade on Friday. So look forward to that. This is one of the few years that on a Friday, I do not have anything planned. So I'm going to sit back and watch my Cornhuskers try to have a non-losing season for the first time in years and get that 6th win. So if you didn't know, I'm a Cornhusker fan. But there you go. That's all I got.
Other than NVIDIA, this is normally a very boring week in stocks that's coming up.
It normally is. You're right. But NVIDIA is just adding this little extra thing to it because if they don't meet the expectations they set last time, then that's going to say they're overvalued. So they have to meet, if not exceed, the expectations to show that they're worth the price they're at right now.
Yep.
So the pressure's on them, and it's going to affect all other semiconductors too if they don't hit that mark, because that's going to be a ripple effect. You're going to see Microsoft probably drop if NVIDIA doesn't meet expectations. You're going to see that happen as well. Google's already taken a hit because of the cloud service. They've been very outspoken about AI, and they have to use NVIDIA chips to do AI. So if NVIDIA can't supply the chips because of supply problems, then Google's going to take a hit. I mean, so there's all kinds of things that are going to have ripple effects based off NVIDIA, what they say in their guidance. So I'm looking for supply issues. I'm looking for U.S.-China tariffs as a reason why they have to give less because of that involvement there. And then I'm also looking like, are they meeting their expectations? I'm looking for a number of things on that earnings report. I'll definitely be watching it.
Yep, me too.
All right. So as always, we hope we have been educational, entertaining, and I forget the last one. It's a long
Uplifting.
day. Uplifting and uplifting. Thank you, Brandon. Because we want everyone to make money. Have a good night.
Have a good night.